Hey, what's up guys? Welcome back to the channel. We have a pretty important video today based off something that I see talked about in the market pretty much every single day. So let's get right into it here. I'm going to be going over 4 key market signals that you need to pay attention to right now to have a better idea of where the market's headed from here. As many of you guys know, we just hit another all-time high in the stock market, but when we're at these levels and hitting all-time highs at what seems to be every other day at this point, there's always going to be perma bears in the market talking about their market valuations and how certain sectors are going to be overextended and due for a correction. But now on top of that, we have 2 other main components that are continuing to drive fear in the current market. The first one is this new Delta variant that is literally on every single media outlet you can find. And 2, how will inflation negatively impact the market? So that's what we're going to be focusing on today. So let's start off with the COVID side of the story. So we all know that the new variant is here and starting to stir up some changes state by state, just like it did when COVID initially popped up back in 2020. And now that this is happening, people are starting to think about how this is going to affect the stock market and whether or not we're going to see another crash just like we did back last March. And I know that the "it's different this time" is probably one of the most cliche phrases in the entire finance industry, but when you look at where we're sitting as a country right now, we are in a much different position than we were the first time around. And when it comes to the stock market, the majority of the selling, at least in the beginning, was from the fear of the unknown, right? This was a new virus that we had very little to no information on, and investors had absolutely no idea how this was going to affect the economy in the long run. But this time, we know much more about what the virus is and how it spreads. The majority of people are already immune and or vaccinated, and variants have proven to be much weaker strains of the virus. So as people get caught up in the daily case counts and see how it's spreading every single day, the real numbers that you have to pay attention to here, and something that investors have clearly already started to figure out, is hospitalizations and deaths. These 2 numbers are much lower than what we saw with the first wave of COVID, so the case counts aren't as big of a deal as the media is making it out to be. Those numbers get clicks and make headlines, but you have to look deeper into the situation and try to find out what they're not going to just come right out and tell you. All right, so let me show you a component that actually ties stocks and how investors are thinking about this into the situation. So one of the industries that took the biggest blow by a mile last year was the travel industry. And if you think we're about to witness round 2 of that, you might recall that back when these stocks had initially dumped 50, even more than 50%, this was before all of the lockdowns were even announced and set in stone. Stocks are forward-looking, so they anticipate the news before it happens. And in this case, they absolutely crashed because that's what investors had anticipated for the near future. If you watch travel stocks closely every single day and see how they react to all of the recent news, you're going to see a much different story unfolding here. So let's jump into Thinkorswim here so I can give you a better idea of what I'm talking about. All right, so here's Spirit Airlines on the 1-day, 1-minute chart, and you can see that it was down just over 0.5% today, but I want to zoom out and show you guys what's really been going on here. So let's go over to the 1-year, 1-day chart. So here you can see Spirit, as well as pretty much every other travel stock, airlines, cruise lines, gaming stocks, and even most hotels, peaked back in early March and then have kind of just been drifting lower ever since. But something interesting happened this past month and a half, so I want to show you guys exactly what I'm talking about here. So if we look at what happened over the past month, you can see that Spirit really just sold off what seems like every single day, taking its drawdown to, at one point, almost 30%. But recently, this downtrend has stopped, and we bottomed out just over a week and a half ago and have now rallied up just over 13%. And keep in mind, during this time, COVID has only gotten worse here in the US, so you would expect this downtrend to continue. But we finally have started a little reversal here, and it looks like the market is starting to pick up on something that the general public is not. And this is the critical point that I think we're at right now, where we have all of these travel stocks that just got hammered over the last month starting to creep back up again and sniff out a recovery in anticipation that the Delta variant is going to have much less of an effect on the economy than most people think. So I think that last month, when all of these stocks were selling off pretty much every single day, that was the market's way of pricing in all of the negative news around COVID. This was the exact point when the UK was at its peak and it was slowly starting to become more of a problem in the US. And as I mentioned earlier, stocks are forward-looking and they seem to be following the trend in the UK, where hospitalizations were much lower when cases peaked, and now they're starting to roll over. So even though it might look like it's getting much worse here and investors might have some anxiety with that, the outlook for the future is actually starting to improve as investors are assuming that these trends that happened in the UK are going to flow over here into the US and likely peak within the next month. Either way, pay close attention to all of these travel stocks and watch how they react to all of the news that comes out every day, because these stocks are the most sensitive to COVID and can give you a much better read on the situation than just the news. All right, so now let's talk about market volatility and how that has played out over the past month. All right, so here we have the VIX, or the volatility of the S&P 500. And when you look at this chart, you're going to have to look pretty closely to try to find any form of panic, because there really just isn't any. In reality, what we've seen is volatility continuing to trend lower, which has been extremely bullish for stocks. And even over the past month and a half, where there have been some COVID fears coming to the market, really nothing has changed in vol space. You can see in the past that all of these huge spikes in volatility have all proven to be head fakes, and this level can barely be sustained even for a couple days, much less a week. So if this trend continues in volatility, it is going to be very bullish for the markets. And as of right now, it doesn't look like anything has changed. So keep an eye on this, but right now I don't see any red flags in vol space. But something to watch out for would be if we saw volatility start to spike up again and then cluster at that level for a couple days or even a few weeks. Now, if that's the case and volatility pops up and then remains elevated for an extended period of time, that's when you want to be less aggressive when you're buying dips and even start to take your positions down and degross your portfolio, because that might be the beginning of a new trend in vol space. And if volatility continues to trend up from there, that's not going to be good for stocks, and that is absolutely not when you want to be running 100% long in your portfolio. But that's not the case right now, so just continue to watch it. All right, so those are the first two signals: travel stocks that are likely front running the Delta peak, and volatility that completely ignores all of the COVID headlines and continues to break down in the context of equities broadly. Now, let me show you another factor that's causing some anxieties in the market, and that's inflation. And we should probably start off by clarifying that inflation is actually not the biggest threat to the market right now. The biggest threat is actually deflation. So let me explain. Inflation is something that we've seen in the market and been well aware of for a while now. We all see the extremely high CPI numbers. This is all public information, but despite those numbers, the market has continued to make new all-time highs every month. So it's obvious that inflation isn't really the main problem, as it really hasn't negatively impacted the market, or at least the stock market, up to this point. It's actually been extremely bullish for many asset classes that are correlated to inflation, like commodities, energy stocks, financial stocks. These have all absolutely exploded to the upside for months now, and now the biggest threat would be that trend rolling over, but it's the velocity behind that move that really matters. Now, a lot of investors that we know have the what goes up must come down mentality with markets and start to panic when they hear all-time high inflation and COVID in the same sentence, but they completely ignore the economic cycle and fail to realize that levels like this can be sustained for much longer than they might think. Inflation is definitely going to start slowing from here, but it's still going to remain at a very high level throughout the remainder of the year. So that's kind of just like the background and the main point that I wanted to make around inflation. For the first half of the year, what we saw was the market in full-blown recovery mode, where we had inflation and economic growth both ripping at the same time. So the biggest threat to that is to start to see earnings come down in a deflationary market. So let me give you two things that you can track every day to give you a better idea on inflation's trend and kind of where it's going to go and how it's going to affect the market in the near future. So the first big asset class to pay attention to is the Crb Index. And in the Crb Index, you have things like oil, natural gas, corn, soybeans, coffee, gold, silver, etc. But why would you want to pay attention to these? When inflation runs hot in the market, these are the first assets to react. And when you look at commodity performance this year, they have been outperforming the S&P 500 by a mile. And some of these individual names are up well over 100%. And getting back to what I said earlier about stocks front-running news like travel stocks with COVID, commodities generally trade based off inflation expectations, which is a great indicator to use to determine whether or not inflation will remain high or if it will start to come down. If you see commodities ripping to new all-time highs like they are right now, this confirms that we are absolutely not in a deflationary market, because if we were in a deflationary market, commodities would be your top short. So you definitely don't want to be short something that's making new all-time highs every day like the Crb Index. So continue to watch how all these commodities trade from here. If they start to break down and slowly start making a series of lower highs and lower lows, this signals that deflation might be approaching quicker than you might think, which will be a red flag if that does happen. So I'll leave a full list of commodities with their ticker symbols down in the description below, but here's just a quick look of how they're trading right now. All right, so on this flexible grid, we have 4 different commodities, where up in the top left, we have oil, and then soybeans, steel, and coffee. And I mean, if you just look at what these things have done over the past year, they look literally just like the S&P 500. I mean, these have absolutely ripped, with oil up pretty much 100%, soybeans pretty close to the same, up almost 70%. And then the same with steel and even coffee over here. I mean, if you look at coffee in the past couple weeks, this thing ripped, even though it's correcting today down 8%, it just went up 30% in only a couple days. So these things are showing zero sign of deflation, and they continue to push higher as inflation remains elevated in the current market. All right, next up, and the last thing that we're going to be talking about is probably one of the most important macro indicators out there that affects a lot more than you might think. It's the dollar, which can be tracked with ticker symbol DXY, and this is actually currently in an interesting spot. So if you're wondering what role the dollar plays with stocks or what it's just been doing over the past year, it's pretty much just gone straight down, because that's what it does during inflationary markets. The Fed has been devaluing the dollar the entire year with their endless amounts of money printing and continued fiscal stimulus. So this is how you kind of connect the dots here and see how that's all correlated. When the Fed pumps money into circulation, the value of those dollars naturally start to come down, because there's pretty much just an endless supply coming into the market. As a result, when this happens, you see things like commodities that are priced in dollars start to rise. In this case, you have the dollar coming down and just continuing to be hammered down by the Fed, and then all of the things that you have to buy with those dollars going up, hence inflation. So let me show you exactly what's going on with the dollar right now. All right, so here's the 2-year chart on the dollar, because I want you guys to see what happened after this initial crash in March. When the market crashed, the dollar shot up shortly after, but ever since then, it has been breaking down very quickly with the occasional head fake, kind of like what we've seen in vol space. But these head fakes really do stir up some anxiety in the market, because the dollar really only goes up during deflationary markets. So every time it has bounced up to these lower highs, people do start to get the impression that we might be moving into a deflationary market environment. But this is where we are right now, and over the past week, it did bounce up just like it did a couple months ago back in March, but it has failed once again, coming back down and continues to break down. So if this thing keeps going lower and starts to touch new lows over the next couple months, that's also going to be very bullish for stocks. So keep an eye on this. But if you do start to see this break out and start a new upward trend, that does suggest that the market environment might be shifting, but as of right now, that is obviously just not the case. The dollar will occasionally rally ahead of a major Fed meeting where they're expected to talk about monetary policy, but that happened a few days ago, so now that that's all over, you just have to read and react to what happens next. And there could also be another huge stimulus package that is heading our way in the fall, which would be extremely bullish for stocks broadly and very bearish for the dollar, so keep that all in mind as well. The dollar could very well sniff that out beforehand and start to break down quickly from here, so we'll see what happens. But either way, those are just some things that I think you should be following in the market every single day, because things change every single day. So anyone who you see online that's just making a huge market crash call is either A, just completely guessing with no data to back it up, or just permanently bearish and trying to justify their own portfolio and positioning. So things change every day. You just have to see what happens. But hopefully that video helped you guys out. So if you did find any value in it, make sure to leave a thumbs up and subscribe to the channel. But I will see you guys next time. Peace.